Today, Bitcoin rebounds from a weekend sell-off. Interpol reportedly issues a red notice for Terraform Labs co-founder Do Kwon. And after California Governor Gavin Newsom vetoes crypto regulation, should states wait for federal crypto guidelines? We ask Coinsquare's Katrina Prokopy. Welcome to CNBC's Crypto World. I'm Kate Rooney. Bitcoin bouncing this morning off the lows of the weekend. By noon Eastern, the cryptocurrency rose to $19,000, while Ether crossed above $1,300. Cardano, meanwhile, fell to 44 cents. Let's talk about the top stories. First, Interpol has issued a red notice for Do Kwon of Terraform Labs. That's according to a report from Bloomberg. South Korean officials accused Do Kwon and several others at Terraform Labs of financial crimes, but have had a hard time tracking them down. Do Kwon moved to Singapore earlier this year, but officials there said this month that he isn't in the country. Meanwhile, Do Kwon claims he isn't on the run. A red notice asks international law enforcement to arrest a fugitive in hopes of extradition or prosecution. So far, Do Kwon has yet to appear on Interpol's list of red notices, which includes more than 7,000 people. Next, Australia could wrap up its testing of a central bank digital currency by next year. According to a new white paper by the Reserve Bank of Australia, the pilot program is exploring the use cases and business models a CBDC could support, but it's not looking at which technology will facilitate an Australian CBDC. Still, the country has taken aggressive steps in recent weeks to build a framework for crypto regulation. Back in August, Australia started token mapping, or analyzing each type of cryptocurrency operating within its borders in hopes of writing specialized rules for each type of digital asset. And turning to the U.S., California Governor Gavin Newsom just struck down a bill that would tighten crypto regulations in his state. On Friday, Governor Newsom vetoed Assembly Bill 2269, which would have created a framework to license businesses facilitating crypto transactions in the state. It also would have created guidelines for stable coins. The bill wasn't unlike the BitLicense law in New York State, which requires companies facilitating crypto transactions or managing users' cryptocurrencies to be registered with the New York Department of Financial Services. Some have criticized New York's BitLicense as restrictive. After vetoing the bill, Governor Newsom said, quote, "It's premature to lock a licensing structure in statute without considering both this work and forthcoming federal action. A more flexible approach is needed." For our main story of the day, fellow host Jordan Smith spoke to Katrina Prokopy, head of regulatory affairs at Coinsquare, about the vetoed bill and whether states should wait to regulate crypto until federal laws are in place.
So in lieu of federal regulations, states here in the U.S. have been implementing their own guidelines for crypto. And in fact, California's governor just vetoed a bill that would have established more guidelines for crypto businesses in that state. And in that veto, he said that the state should wait for more guidelines from the federal government. I mean, what's your take on this from the outside? Should states keep regulating on their own, or should they wait until the federal government reacts?
My personal view is that it's going to take a while for the federal government to react. And I think there's, the added complication of, in the U.S. system, the question of where the jurisdiction properly resides is still a very live question. Is it within the sort of the parameters of securities legislation, or is it which would be the SEC? Or is it more properly, within the remit of the CFTC, under sort of derivatives regulation? And I think it's going to take time for all of that to be fleshed out. I think there is obviously there was the framework introduced by the White House very recently. There's a couple bills that are pending on Capitol Hill, all kind of talking about this very topic, but it's going to take time before it crystallizes into clarity that the industry really needs. And because of that, I think that the state efforts are very worthwhile. We've seen the New York State Department of Financial Services and their BitLicense and how that's been operating. And I think, it's unfortunate that this bill was vetoed in California. My personal view is that This is an area that investors need protection in, and industry needs clarity on how to comply with regulatory requirements, even in respect of basic oversight, licensing. So rather than waiting to have the Cadillac framework in place, I think that these incremental steps go a long ways to investor protection and are very good for the crypto market at this time.
Yeah, you mentioned the bit license in New York, and I think there's been some critique from crypto businesses over that law. But at the same time, it's probably among the strongest crypto regulation we have in the U.S., and it kind of informed what's happening in California as well. Mm-hmm. Can statewide legislation be a bellwether for how the federal government should regulate here in the U.S.? How much of what we're seeing in New York and in California affect federal law in a worthwhile way?
I think the federal law will fill in the gaps and will give more clarity on the characterization of some of these crypto assets. We've seen the recent Ripple, the summary judgment motion, and I think that's going to be really really elucidating from what is this an investment contract? Is this a security? So I do definitely think that the state efforts for these licensing regimes really do inform what goes on at the federal level. There's with the necessary tweaks that relate more on the federal level to the characterization of the assets.
Should we expect anything substantial coming from Congress next year?
Rulemaking at the federal level takes a lot longer, and they want to get it right. And I think there's been a lot of critique from industry that the present clarity that industry so desperately is looking for, because there's a lot of actors in the space that want to be regulated, that want to do this the right way, that want to build, a business of trust and compliance, and they're just lacking the clarity on how to accomplish that. And I think that they're sort of taking issue with the fact that what the SEC seems to be doing is regulating by enforcement. And I think that what the industry is really looking for is not regulation by enforcement, but really clear guidance. And I just think that takes a while, particularly when you have jurisdiction split in the US at a federal level between the CFTC and the SEC.
You're based in Canada. Can you talk a little bit about what the regulatory guidelines look like there, especially in the wake of some of the news stories regarding the trucker movement there and the controversy there, what it looks like now, and how crypto regulation there compares to the US?
Well, first of all, unlike in the US, in Canada, we don't have a national securities regulator. We have provincial regulators, securities commissions in each of the provincial jurisdictions. They are seen through an umbrella organization called the Canadian Securities Administrators that sort of try to achieve harmonious regulation. So on that basis, I think Canada has come out a lot earlier with more definitive guidance on the regulation of crypto assets and how crypto assets are viewed from a securities law standpoint and sort of the applicable regulatory requirements.
One of the arguments we hear from crypto companies is that because certain states are stricter than others when it comes to crypto regulation, there could be a flight of talent. Have you seen anything like that on a province by province basis where maybe crypto businesses find a particular province more friendly to them and they will move there to operate?
I think built into our regulatory framework is a concept of principal regulator. So if you are a crypto business, a crypto asset trading platform located in, for example, Ontario, your principal regulator would be the Ontario Securities Commission. And unless you are prepared to pack up shop and relocate the mind and management of your company to a different province that you may perceive to be a bit more lenient in terms of expectations and requirements, you're stuck with your principal regulator. So I would say, to the point where if you're a new company starting and thinking about where do I want to set up shop, I would say that question about favorable versus less favorable may factor into it. If you're an existing crypto business, I think it's less of an option. Of course, it leads to unlevel playing fields, an unlevel playing field between provinces at times, and I don't think that's a desirable thing.
what are businesses doing to self-regulate? What are some of the things we're seeing in the industry while they wait for more guidance?
I think there's a lot of industry associations happening and a lot of development on how to educate regulators and legislators and lawmakers on how traditional rules in financial services may need to be modified for the crypto market. I think there's a lot of industry movement in thinking about perhaps a unique self-regulatory organization dedicated to digital assets.
Okay, that's all for Crypto World today, but we'll be back again tomorrow with a lot more, so we'll see you then.